This panel will be run by Vainovskis, partner at Eversheds Bitans.
Thank you very much. And I will introduce my great panelists.
Thank you, Maris.
Greetings, dear participants, dear colleagues, but above, dear friends. I am Vainovskis, and I am confident that the present is clear and the future is bright for Latvian, Estonian, and Lithuanian capital markets development. Why I am so confident? It's very simple. It's a no-brainer. It's because of you. It's because of you. We have here investors. We have issuers. We have stakeholders. We have you all energized and interested. And that is a clear path to the success. Plus, of course, we have all the necessary infrastructure. You just heard Bjorn from the stock exchange speaking. I mean, they are so professional, they're open, they are willing, they are inclusive. We heard the regulators speaking. In not so many countries, regulator says so clearly that they are pro-capital markets. The regulator have a clear plan, and it's not just a plan on the paper. It is something that the regulator implements in the daily life, and I can attest to it. The regulator is open for questions. They are willing to support. They, of course, keep their regulatory stance and prudence. But thank you so much for what you are doing. It is a real encouragement for the market. Plus, what we also have, we have good banking system. It is now clean system. The banking system have implemented not 50%, not 70%, not 99%, but 100% of FATF and Moneyval recommendations. The only achievement, I think it is in the Europe. So, what else we have? We have great support from the stakeholders. We have European Bank for Reconstruction and Development, doing so many good projects for capital markets development. We have Ministry of Finance, very concentrated on policy objectives and goals, and actually following through and implementing those. We have Altum thinking about and developing IPO support fund. We have many, many more, and those projects are also supported by the European Commission. So thank you so much also to the stakeholders. But what did I miss? Last but not least, what do we need for capital markets? We need the money. And money is there, because I am told that at least for Latvia, there are 9 billion euros on the accounts of potential investors from the retail. Can you imagine? 9 billion. And what we just need, we basically need a fraction of that to make capital markets, even more agile, even more developed in the Baltic region. So, how to get this money? The key word, of course, is trust, because the people will only vote with their money if they will trust the system. And that's trust, of course, leads to security and protection, and security and protection leads to general development of the market, the resilience of the market. This is what we need across the Baltics. We need the money to stay in our own economies, not to support economies of other states. We need our own investors to capitalize from the markets, to get dividends, to get yields, to get their shares rising in price. So that is what we need. And let us discuss how we get there. We have a fantastic panel today to discuss about it, and we have, after the panel, there will be 2 success stories, because to gain this trust, we need to talk about the success stories. We will talk about, there will be great presenters from the recent Indexo IPO and Enefit Green IPO. Both Latvia and Estonia are proud of these stories. And I will now introduce the great panelists. First, the person whom everybody knows in Baltic Capital Markets. You know, a true professional. He's everywhere. His reputation is preceding him, like James Bond, yes? So, welcome to the stage, Ivars Bergmanis, head of LHV Institutional Markets. Please, Ivar, take your seat. The second speaker, a marketing, PR, and strategic innovation guru. He knows when to publish stuff, how to publish, and who are the target audiences. Welcome, Edgars Petersons, weekend partner. Look at him. Creative geniuses do not usually wear suits. Thank you so much, Edgars, for doing this for us today once. Thank you. We have extremely experienced international expert who has worked on real IPOs in New York Stock Exchange. He leads capital markets practice in a Big Four company. Please welcome Stefan Lundberg, KPMG Sweden partner, head of capital markets. And last but definitely not least, a person who runs the biggest, the largest private equity fund in the Baltics. When they invest in a company, it's like a positive stamp, a label that this is a good company. And many, many companies would like to have their investment. So, welcome, Simonas Gustainis, Baltcap, managing partner. Please. Right, so we have an excellent panel, and I would like just get on to the business. Ivars, you know, as I said, you know everything about it. Could you just give, let's say, what is the current landscape? Who are the movers, who are the shakers, and what is on currently in the Baltic capital markets?
Thank you, Maris, and thank you for the opportunity to be here today. What I'd like to propose is putting on screen a couple of slides, just to set the scene, what we've actually experienced over the past couple of years. So let's go straight into it. I think maybe 10 years ago, everyone would have been absolutely amazed that something like this could have been done, and hats off to all stakeholders of what we've actually managed to achieve since 2019. So we've had 17 IPOs. I think that's even worth a congratulations on its own from that perspective for the Baltic capital market. Now here's some of the details which are extremely important to understand. If we look at it, the majority of these have clearly come through on the First North or the growth market or alternative market, depending on how you want to describe it. And that's where I think the future will also be. 10 years ago, there was nothing. Now, over the past 3 or so years, this is where the majority is already moving, and we've had healthy issuance coming through. In terms of investor participation, we've had fantastic contributions and participation from Enefit Green, more than 60,000 investors coming through. We've had more than 100,000 investors, I believe, registered in Estonia. So the whole retail side is moving ahead very much in leaps and bounds. If we look at the amount of capital which has been raised, it's over 700 million. Now, one thing to mention here immediately is that the lion's share, so approaching 87% or so, is actually from 2 IPOs, both of them from the utilities energy industry, so Ignitis, Enefit Green, and then the balance, which is not such a large amount, coming from these smaller issuers. So what we can basically say is that while we had a lot of these IPOs oversubscribed, the majority of them were actually quite small. And what I would like to propose here is, and we can talk about this later, is that we should really be focusing on 3 sizes. So not so much whether it's the alternative market or regulated market, but whether we have a small IPO, medium-sized, or large. Large, that's quite clear. What is large? Upwards of, say, 100 million. But it's then the differentiation and what an issuer should be also aware of and focusing on if we're raising only up to, 1 million, couple of million, versus that middle area. So anywhere from high single digits up until high double digits. And each of these requires different approaches. And that's something which I'd like to discuss today as well, and also the structure of how the actual participation takes place. Most of the money raised here, if we have a look at who actually was involved, is new money. That should be no surprise for a market which is very much in the development phase. I think the region isn't yet really that prepared for a lot of existing shares, or let's say, secondary shares being sold, and the old adage being, well, hey, if it's so good, why are you selling your shares? But I think that's more a case of market development. This on its own already is, in my view, a fantastic achievement. We've had a bull market, and certainly now, in the situation and circumstances where we are, it will be more challenging, which is all the more reason why we're here today also to discuss what are some of the important elements that one needs to also think about, and what are some of the options. So without further ado, I'll let someone else speak as well.
Okay, thank you so much, Ivars, for setting the scene. But Stefan, right, you come from very developed market, Sweden. What would be your reflection on the Baltic capital markets, these recent developments, and maybe what awaits us in the future if we are going, the Sweden path?
Yeah, thank you. So I think what you talked about earlier, and then what Bjorn mentioned as well, it's having the right ecosystem, right? Having the ecosystem in place, having all the participants, and foremost having the trust. And then getting both a good mix of international, domestic, as well as institutional and retail investors. So if you look at the Swedish market, I think over a number of years, as Bjorn mentioned, we've worked on the ecosystem and tried to improve it, and we've had some great success stories. We've had, some blockbuster IPOs, both domestically in Sweden as well as internationally, in particular in the tech scene. We did have the Spotify IPO in New York, which generated a lot of interest in Sweden. We had a lot of other kind of tech wonders, if you will, in the Swedish market that has generated a lot of positive interest and an interest both by institutions and retail investors to participate in the market. The other thing is the ISK accounts that Bjorn mentioned, which is essentially a savings account form that the government created, which makes it easy for retail participation.
Right.
And that all of that hasn't all happened overnight, but slowly and surely it's helped, and we haven't had any scandals. So I think we've done a good job of keeping a high level of quality. My role, or KPMG's role in this particular case, we're a stakeholder, and we help the process. And everyone working well together. And the Swedish market is also a pretty self-regulated market. So I think that's one key contributor that market participants have developed self-regulation effectively, that have raised the bar and that really have helped the overall market. 2021 was a record year. We had 150 IPOs in Sweden, which was amazing.
Wow.
Right?
So, but based on what you have heard, the path is correct, right?
I think you're definitely on the right way. I think you do need, it'd be helpful if you have a couple of larger IPOs to just generate the interest, both, especially in the international scene. And yes, raise the volume.
Yeah.
Yes, raise the volume. But you have the ecosystem, you just need to keep working at it and get more liquidity in the system.
Thank you, Stefan. So Simonas, you see, we are all pretty fascinated, and we have some success stories. But you are, I mean, a real big institutional investor. And maybe you have also, you definitely have a perspective. Is this also you're too fascinated, or you have some other comments?
First of all, thank you for this party atmosphere. The fact that it's in the morning, I wonder what the evening will be. So thanks for the organizers. One thing that I think deserves mentioning is that in the whole pie of deals, because let's say IPOs are some sort of a slice of financing, in this region, this remains a niche theme. If you look at the turnover of the market, it is small, and to let's say think of it as the mainstream financing alternative, it's not enough. It's still in kind of nascent stages, and it's interesting that I myself was involved in Lietuvos Telekomas IPO. When was it? 2002, 20 years ago. And I was looking at the statistics also over the last, what is it now, 17 years, what has been changing in terms of number of participants in the IPOs, the average orders, it's actually not crazy much. It's always about several thousand, if you look at the median sizes. It's always about several thousand participants, probably even the same people, and it's always anywhere between 3,000 to 8,000 euros average order. So it seems to me that there is something structural that is happening, except for cases like Enefit, where kind of it's almost tectonic in a sense that it quintuples the amount of people participating in deals for that deal. Now, question is if there are spillover effects coming out of it, and if I was involved a bit in the building of the private equity market, so to say, in the Baltics, and it is very correct, and there is a bit of a risk that people get bogged down talking about ecosystem and how everybody else has to do something. And I think in this sense, what we have is a responsibility to follow through, and I'm envious of the ability of Swedes to sit in the same room, agree things, and actually do them, as opposed to us often talking about doing things. So that's one thing. The other more concrete thing, you seem, I think you are hitting the spot a bit in terms of where the money is. Earlier, we could have spoken that we do not have the money in the region. I think now we do. And much like with the financing side, where the credit dominates in terms of the financing form, and credit in the form of loans even, on the availability of capital side, also deposits seem to be the place where all of the money is, as opposed to other instruments. And it is often somehow wrongly presented as some sort of a competition, that there are other forms of financing or other forms of putting the money in. I think it's actually big business for the banks, and much bigger business for the banks to promote slightly more risk in an organized manner, and help and capitalize profit-wise in creating that equity culture, as opposed to not making money on the deposits. So,
yeah. So thank you for raising this very important topic of scale and basically the investor base. You know, because then it leads to larger projects, larger IPOs. But Ivars, so what would be your perspective? You represent a very, very respectable, also, let's say, retail bank. Has the retail investor woken up? Does he have the money? And, you know, what is the current situation?
Look, first of all, I think, and I really appreciate the fact that Simonas has been around this region so long and following it, where things have changed. Certainly in the Latvian market, is the Latvian investor is finally waking up. Many people are doing great things in order to generate that activity, And we have proof of that. If we look at the Delfin Group IPO and the number of retail investors that took place there, we've got the Virši IPO and the number of investors that actually took place there. It's actually a far higher number. And of course, we had a healthy number of retail investors participating in the Indexo IPO as well. So I would say that if we only look at the amount of capital which was raised in these, let's call them small-medium IPOs, that's already representative of what we used to have in some of these larger ones. So something is definitely already moving. Now, one other thing to realize as well, it was talked about preparation and trust being important. Here's the other thing, it's called pure commercial economics. And anyone who's working in the legal field or investment banking field, I think if you really think about it, trust is essential, quality is essential. And so all the sort of things when it comes to due diligence, preparation, verification, these are essential. But when you're raising such a small amount of money, you're actually working as a startup yourself. Because, I mean, to raise a couple of million is probably even more work than raising, say, 20 or 200 in some respects. So it's a dedication issue. The one thing I would like to point out here, and I think this is a great opportunity to introduce Edgars into the realm, is that as well that you can't just prepare. You need to be able to also market and sell your actual story.
Exactly.
And going forwards, as I said, the environment is more challenging. That's okay. There's always room for good stories if they are priced correctly. Obviously, markets go up and down, expectations of investors go up and down, and investors are, small investors today are just as smart as maybe professional investors were 20, 30 years ago because of the technology advantage. But there's an essential element in this preparation phase, putting aside lawyers, putting aside investment bankers, and it's actually preparing the story for the retail investor. And I think that's been underestimated, what sort of a role that will play, whether it's a smaller offering or larger one. And maybe then this is a great opportunity
Ivars,
to
because
introduce Edgars.
Communication is key. You can have a very good issue, a good offering, but you need to convey this information to the potential investors. Now, and Edgars, actually based on your experience, indeed, can you just share us some tips and tricks? And who are the target audiences? What are they reading? What are they not reading? How to really reach there in all this hectic daily schedule and make them open their bank accounts and vote with their money?
Yeah, according to different surveys, there are 16 to 22% of people open to actually participate in capital markets, invest in shares, and so on and so on. So the question is there opportunity, one? And the second one is what we come back to time and time again today, is trust. And so the question is, what marketing has to do with IPOs and capital raising is create trust, help make decisions, manage expectations. And then the question is, can we actually create trust and manage expectations just with, 4 to 6 months of campaigning about the IPO? Yes, it's important. The campaign is important. Finding the right audience, building the right story, having the right narrative blocks, and generating leads, choosing tactics and media, and so on and so on. But actually, what IPO does is opens a huge Pandora box of marketing questions that have been either ignored, swept under the rug, or postponed. And these questions involve things like, how do you look the corporate identity? How do you package your consumer goods? Or how do you package your financial reports? How do they look? Are people actually aware about you in the markets, and so on and so on. And why is it important, especially in terms of retail investors, is that even though people want to kind of think of themselves as knowledgeable, they still make a lot of shortcuts in their decision making based on either visual cues or things like we see in the surveys that a lot of investors say that one of the crucial decisions, the crucial aspects they take into account when thinking about investing in the first phase is looking at the social media accounts. How do they look? How do they perform? How do you talk? How are you kind of visually presented? So when investor is considering, especially retail investor investing in you, it's not like a consumer who thinks about either I buy a professional service from you or a consumer good from you. Investor is buying the whole package. So you need to look at yourself hard and see, is the whole package appealing and creates trust and will create trust in the future. And as David Ogilvy, one of the advertising gurus, has said, is that consumer is not a moron, she is your wife. With investors, it's the same. They are not cold-hearted, calculated automatons that just look at the financials. They also have emotions, they also have, you know, biases, and we need to exploit them. So that's one thing. And another thing which I see in Latvian, probably Baltic markets, is that we have this concept that owning is good. You prefer to own the flat, not rent the flat, and so on. Right. So the question is, how do you make people kind of feel that by owning the share, you also become a part of a company in some sort of way? And I think a couple of companies have done good things, like they might sound trivial, but they have worked. Like, for example, Ivars created a special loyalty card for their investors, and some people even...
And the coffee.
And some people actually invested. I've seen some tweets that they have calculated that by investing these couple of hundred of thousands of euros, it actually makes economical sense. They get back it in discounts. Or Madara, which sends out investor boxes with new products that you can try out. It creates emotional bond and ownership bond. And I also think in terms of the target audience, what we've seen is that it's easier to work with people in their late 20s, 30s, maybe early 40s, because the problem with older audiences is their experience. We all remember, well, I was a kid then, but still 90s with volatility and a lot of, you know, problems with, you know, investing somewhere and then losing all your savings and so on. Then people in their 30s and late 20s can be the spearhead that you can talk with, that are open to kind of participate in these markets, and later it can have a spillover effect to the other parts. And I think another aspect is also what we've seen is kind of the narrative is built of a couple of blocks. One is, you know, the central story, what you're trying to tell, the emotional story, to create the feeling of belonging and so on. The second part is, of course, where smarter people than me can help me out, like Ivars or Maris, with all the financial stuff and convincing people that it's a legit, so to say, investment. Then it's also more and more about the ESG topic. And the fourth block in this market, which is relatively, you know, becoming more and more mature, but still you need to have a block about basic financial literacy regarding the IPO, because when new retail investors come in, what we see is that our clients that have done IPO, they actually have to set up a hotline that actually deals with very primitive questions about, like, how to open a security account, and so on and so on. So that's a thing to consider. What else? Yeah, and of course, more and more people also resonate with patriotic feeling, that you actually invest and put back the money in your own company, in your own economy. And I think this narrative can also, industry-wide and also in specific IPOs, can be raised and used. Yeah.
So thank you very much. So comprehensive, I would say, which gives a very clear message that you must have your PR team in the IPO as part of the core team. And also there's opportunities which you mentioned. In addition to just listing shares, you can have investor loyalty programs. And it is so relevant for retailers, so who want to get more engagement. But Simonas, you are definitely not a retailer. Maybe you personally, but not your company. So what would be your perspective, a little, maybe a reflection, but what you, as you know, real, you know, big, you know, professional investor, what you are looking at when you decide on the investment?
Just a little bit coming back on trust. I sometimes fear that we may try to take too much responsibility on us and take it away from the retail investor. Eventually, a retail investor is supposed to be a rational decision maker. Even if they decided based on coffee for free or a hot dog left, right, and center. But still, eventually, it should be an economic decision. Otherwise, we will have to pay for the difference. So in this, I think I would try to approach this in a way that we should be exposing retail to more products in general, irrespective of geographies. And they need to be quality products, which will then feed back into the local market because people want to invest in the local market. But once they understand how this works, they will invest into it much more credibly and let's say, sustainably. Otherwise, we will have another, not a banking crisis, but some sort of an investment crisis because somebody overpromised. So that's a bit of a reflection of this.
Clear. So very good. I also wanted to raise this topic for additional awareness or for incentives for the issuers, basically to try it out. And it was already mentioned by Gertruda that our regulator has set up, I would say, IPO sandbox, a regulatory sandbox where both the equity for shares listings and also for bond listings, the potential issuers can basically play into this sandbox alongside the regulator, and that is actually high quality, free of charge exercise which we would really, encourage the companies to do. There are currently 3 participants, but what you have in this sandbox, you would basically have to submit a list of basic documents like annual accounts, like certain compliance documents, and a brief description about your potential intentions in the capital market. And then a very respectable panel of experts, including Ivars, but also 2 other very respectable investment banks, and also several lawyers, right, leading law firms in the country. They would basically look at your case. They would give you, together with the regulator, some kind of initial feasibility review, feasibility study, which are the key opportunities for you, but what you need to take into account, what you need to maybe change, like starting from simple things like changing, of course, from CA form to AS form, or we will check whether you have 3 years IFRS accounts in order to play into the regulated market, the first list. But also, if your strategy is going for alternative market, you do not need 3 full years of IFRS audited accounts. So, this orientation, but also on the financial orientation, it's what we would really like to encourage you, the potential issuers, to use this opportunity that our regulator has set up by showing their leadership. But I wanted to ask you maybe, based on what I described, so is there also some regulatory sandboxes in Sweden, or what is like happening basically? How do you consult, or how the companies orientate themselves?
Yeah, we don't necessarily have sandboxes per se, but I think that's a great idea. Since the market is much more developed in Sweden, there is a lot of participants, including ourselves, that work with companies doing IPO readiness assessments and look at what they need to put in place. And obviously NASDAQ then have put this First North concept in, where essentially a lessened burden. Right. I think what we're finding is a lot of companies, you misspell the myth of this administrative burden. The administrative burden, yes, there are some additional requirements for sure, but I think more and more companies are starting to see that as an opportunity, because some of that is really going to help them to scale up. And when you talk to founders, I worked with Spotify, for example, for a number of years, all the way through the listing. When I sat down with the founders, it wasn't necessarily about the listing itself. It was an aspirational goal. Okay, we want to list our company because we want to be better and we want to be able to scale. So a lot of the requirements, in many respects, help the companies become better. And so they see the opportunity, and I think that's the best way to look at it. And then obviously, the first North versus the main list gives you an opportunity to do that in a sequential way. And given now, since we have gotten so many success stories, different sizes, I think companies are also looking around and say, well, if they can do it, why can't we do it?
Right.
So I think it's a great, and again, it's not rocket science to list a company.
Sure.
It's just hard the first time.
But it's a certain journey, and I get that due diligence and initial orientation is a must.
Right.
Right.
Yeah. So I think the sandbox concept, where you actually now you create a framework for company to essentially test the waters, if you will.
Right.
It's a good one.
Exactly. It is. So I also wanted to raise, you mentioned ESG. Like everybody talks about ESG, about sustainability. To some extent, it has become a household name. But when it comes to the detail, when it comes to the understanding, there is still general lack of clarity, lack of understanding, also lack of engagement. But now if we talk about ESG and capital markets and sustainable finance, now the businesses usually say about ESG, yes, but show us the opportunity, show us the money, show us the why, and the IPOs and green bonds, blue bonds listings is exactly this one of the opportunities for the, let's say, to implement your ESG and sustainable strategies by raising money for a particular purpose. And let's say, but I know that Baltcap, you are very aware of sustainable investments. I have read your detailed, let's say, taxonomy-aligned investment strategy. What you would say, let's say, capital markets and ESG, sustainable finance, all that. What would be your reflection?
It's good that you summarize it in this last sentence. It can often lead to numerous words in a bucket, and I think it still very often does. And in this sense, what European Union has done with this a bit, let's say, higher clarity and a bit of a push to organize the data, to organize how you talk about yourself, has been helpful because that nudge was needed. I was looking at a correlation, like a little graph of ESG ratings for the same companies between Moody's and S&P, and there is no correlation, basically. For the same company, they have totally different ratings. It's not the same with credit ratings, which kind of means that the method, even for the really top-notch companies which have the capacity to calculate and evaluate themselves, is not really there. So for us, even if we have this 15 years kind of accumulated experience in ESG parameters and sustainability, it still boils down to material things. If you can do, or rather materiality of topics. So each company has their own topics, and you just have to deal with those topics particularly. And when we speak about taxonomy, it's kind of easy when you are only doing taxonomy investments. Then you look at the table. If I fit, I do the investment. If I don't, I don't. Where the more interesting topics are is when you are doing good things, but you're not in taxonomy. And then how are you able to describe it? And to say that there is already a standard, no. That because there is no standard, nothing should be done, also no. So this approach of OMX that was voiced today earlier, it kind of makes intuitive sense that you set the ground rules of how people should talk about it, and then let the market decide how it judges the outcomes of it. Kind of makes sense for now.
But in your investment decision metrics, so I get that ESG and sustainability are now firm on your scorecard.
Oh, it's in some of the strategies that we have in infrastructure strategy, it starts from taxonomy.
Yeah.
So if it's not taxonomy, you don't do it, or very rarely. And in the other parameters, you kind of need to have a plan for sustainability parameters as part of your business plan.
And just a very quick survey. So, is ESG, basically a must-have now for a successful capital markets listing for an issuer?
Absolutely.
Okay.
I think that's up there in the top 2 or 3 things that people are thinking about.
Yes. Edgars, what do you?
Yeah, I think it's very important as a hygiene factor. And then the next question is, do you put it as one of the key value propositions and key positionings? And if yes, can you fulfill it? Otherwise, it's just a self-serving, goal and just a greenwashing.
Yes, be aware of greenwashing because it's serious. Whatever the management writes and the supervisory board approves into the prospectus, this is basically a contract or a binding promise, a statement of truth, a representation to the market, and it should be addressed with responsibility. But if you have really sustainable goals, sustainable investments needed into the company, this is a fantastic opportunity to add this, let's say, green label to your securities offering and succeed. Ivars, would you agree?
Absolutely agreed. I mean, NASDAQ itself is offering green credentials as well. I mean, there's green rating agencies. I think one thing to remember for the issuer, especially the smaller issuer, is that it's not a huge necessary expense that you have to compare yourself to, let's say, a mega large company. So it can be done at a small scale. The main thing is that it's not greenwashing, there's believability, there's clear numbers, targets, and you're then tracking yourself how you're performing on that. So not the amount, but the quality of the information and showing how you're achieving things over time. Otherwise, as far as I'm concerned, it's going to be all about greenwashing.
Okay. So we have encouraged, I would say, you already enough. There is opportunity, there is strategy, there is ESG. But let's, in our final minutes of the panel, let's get down to the real business, the strategy. Because everybody then wants, the next obvious question is, how to do a proper valuation and with what actually strategy in terms of the volume to enter the market. Ivars, maybe you could start some reflections on this actual to-do list.
Well, the first thing I think to remember here is, and everyone is usually guilty of saying this, people usually say, I want to get listed, I'm going to do an IPO. That's actually far from the truth. Yes, we have seen this here in the Baltics. However, there's 3 ways of getting listed: IPO, private placement, admission to trading, and technical listing. Yeah. And most people don't understand the differences, what's involved and where. And you actually have totally different budgets, totally different approaches. And you can actually use, let's say, a technical listing as an initial way of gaining this trust. You don't actually have to do a public offering to actually become a listed company. So that's the first thing, I think, which is misunderstood. I mean, financials is one thing, but then also the other benefits of actually listing there. In terms of the actual numbers, one thing I'd like to also just reflect on is we're still in extremely early stages here. And just to give you a number or some sort of gauge, the Baltic markets could easily grow 5 to 10 times in size from today, and we're only going to reach the average or median levels that you have in the EU. That's the sort of scale which is in front of us, but that also requires careful approaches. But you don't have to be huge. Going back to your valuation question, sensible valuations, working with experts who can help you with structuring it the right way so that trust isn't lost. And even if your value is starting from several millions, there's still scope. The question is timing. When, what price, and how to actually approach this listing. I want to avoid the word IPO for now. So just a quick summary from me.
What I also have observed in actually working that investors, they do not like to see that, of course, an IPO is an exit strategy or could be an exit strategy for the current investor, at least partially. But the investors would like to see that those who have built the business, who have invested in the business, who are managing the business, also will stay in the business at least for 6, 8 maybe months, maybe more. And that is called this lockup, would you based on your international experience, are lockups typical in the IPOs on your table, or there are different strategies in terms of that?
Well, I think it depends a little bit what type of company it is.
Yeah.
And, and if the founder is very, significant to the operation of the company. But I think lockup provisions, certainly if there's any sort of doubt, helps. Clear statements from management or the owners that they're going to take a long-term perspective. That I think certainly helps for a successful IPO. And really getting into that mindset, it's not necessarily an exit. It's an evolution for the next step of the company. Yeah. Because it's when we often talk, when we do our IPO readiness and have the initial conversations, it's one thing getting everything ready to actually list, but the real game starts the day after the listing, and really being able to think about the future and being able to forecast and do all those kind of things. So a lot of times it's getting all the historical data right, and a lot of times the afterthought is the FP&A, the forecasting, the ability to guide, those type of things, and that is the most important. Lockup provisions help, but I don't think it's always necessary. But in some instances,
very good perspective. Lockup, of course, means basically that the current shareholders will not sell their shares in the market for a certain period of time, meaning they will be in. They are not escaping. The investors want to see that their money will actually work for the company, right? So that's
right.
Okay, and maybe from your perspective, something, still on valuation, in what, if you are extremely good on valuations, but what is the price when you will consider investing? Is it, maybe give some, what is a good price?
I'm a bit conflicted when I speak about listings. We as a private equity fund investor look at the listing as a form of exit. And for us, we need two things. We need a clearly better economics than with other exit, or the plan of the company needs to be such that it justifies kind of a partial exit and waiting for the growth of the value of the remaining part. And in a sense, it is like an earn-out, but with the public.
Yeah.
With strings attached. So kind of many things need to get in place when you compare it to just a basic trade sale for a listing to be more attractive for us as an alternative. And yes, economics plays one part of it if they are achievable, but listings are, of course, significantly dependent on numerous conditions, macro including, and market sentiment. So it's like a fickle undertaking, even though it boosts the ego at least. But in terms of other parameters, there is so many things to control that we are more inclined to stay with let's say with more defined projects than such listings. Yeah.
Excellent perspective. And maybe just to finish with any final short tips from the marketing perspective when you communicate actually the strategy, not just that there is happening, but what is this unique offering, how vocal, how clear, how focused you should be on it?
Well, I think one of the things when you're actually in the active communication phase of the IPO is to be agile. And with the new digital tools, you can tweak your channels, audiences, and messages in real time pretty easily. So if you see that your subscription date is approaching the deadline and the subscriptions are not there, and it's 2 days until the deadline.
So you install a countdown, yes?
You get together with a team, and it's good to have a multifunctional team ready from different sides and perspectives, and decide and in a flexible way tweak your marketing and communication approach, and it's doable. And of course, I'm advising against, you know, lying and creating false expectations, but there are other ways of, you know, stimulating. So being agile and having a lot of, you know, people on the team with different backgrounds, that is very important.
Thank you so much for your reflections. So I think, you know, it was a fantastic discussion. You heard various perspectives, both from the retail, from the strategic investors, from experts, from marketing, from international expertise. The opportunity is clearly there. We just have to deliver, and we will deliver. So thank you so much, dear panelists. I would say they deserve a round of applause.
Thank you.
So I see that we're very good on time, but just in case, are there any questions? Maybe Mr. Idelsons? Yes? Yes.
Of course, there are questions.
Yes.
And since we are a bit short of time, I probably would ask only one of them, slightly rephrasing it, because it concerns current valuation levels of the companies, especially the companies which are doing IPO in the market. So what's your view? I mean, panelists' view on the current valuations of the Baltic companies. Are they excessive? Do they have potential to grow? And how it corresponds to the things happening in the global markets at the moment?
Maybe immediate response from me is everything is dynamic, always moving, and our role as an advisor is to always ensure that the client is aware what is happening. Don't assume there are fixed numbers, fixed ratios, everything is in flux, and we're going to be putting you in comparison, not only on a standalone basis, but in comparison with other companies. And please do remember there is exceedingly high volatility, especially in certain sectors, that might mean an overnight change. And so expectations have to be realistic, but you can always do a transaction. The question is what the price will be.
Thank you. That's a reasonable answer to this question. Okay. Is there a time? I think there is time for a couple of more questions, right? So, so why don't I ask it? Yes, there is a question about can panel participants please give an example of possible targets for large IPOs in the coming months or years? Government sector versus private. So I understand if there is something in the works, you would not be able to disclose it, but let's put it in simple ways. Do you expect that the next sort of 100 million plus IPO would be in the private sector or in the government-owned sector? And in which country?
I can just basically say that state and municipal sectors are the ones who could deliver on that one. Maybe
I can also extend on that, Maurits. Thank you. One thing that we've noticed also, which is great news with the sandbox, is I think state-owned enterprises, particularly in Latvia, have realized that they don't have to be giants in order to come to the market. That's been as a result of maybe misconceptions that they've heard that we have to be, you know, hundreds of millions in terms of an offering size. You can be way smaller and still address a very captive audience, 6 million people across the Baltics in terms of retail investors, institutional investors as well. And there is certainly then scope. So this realization and education, financial literacy also at the level of state-owned enterprises, I think will be making a very concrete move in this direction, but that will require a bit of time.
So, from government-owned sector, the next big IPO will come from?
Possibly.
Thank you. And one more question, probably also to you, Ivor, relates to ease of access for retail investors to the Baltic capital markets. I mean, technologically, the question relates to the perception that Baltic stocks seems to be mostly limited to outdated bank systems. Mobile accessibility is limited. So, what's your reflection on that? How do you see this, you know, as an obstacle for retail investors to actually get access to local markets?
I am surprised that anyone would question that there's difficulties. If we look at pan-Baltic retail investors, I mean, just about every single bank and broker will have some sort of facilitation, which is easy, whether it's investing in the Baltics or beyond Baltics. But then also we have members such as Interactive Brokers, which offers access into the Baltics. Doesn't matter whether you're US-based, French-based, Spain-based, Spanish-based, doesn't matter. You do have an inroad here. I think the whole challenge is capital is scarce. Don't assume that, hey, I'm fantastic, I'm a listed company, that everyone's going to come and run and want to invest in you.
Right, thank you. I think
You
that's
know
it.
what
We
I
are
said
running
about
out of
Ivars?
time.
He knows everything, right?
Yeah,
so
yeah.
this is
I agree. So thank you, dear panelists, and Maris, you want
Thank
to
you
say
so
final
much.
words, probably.
I just really want to. They deserve another round of applause. Thank you. Thank you very much. Thank you. Thank you. Thank you very much. Thank you.